Hello and welcome to Chapter 6 Notes. And so in this chapter we're going to talk about cost allocation for service departments. That'll be kind of the first series of lecture videos, and then the second series of lecture videos will cover mainly activity-based costing. Okay? So let's talk about the idea of cost allocation for service departments. So what we're talking about over here is we are allocates shared costs to other departments. I'm going to move this over a little bit here just so I can write better. Okay? So we're talking about allocating out shared costs to other departments. And so what we can say is because costs associated with shared resources cannot be easily traced, they are allocated. Okay? So what we're talking about over here is we're talking about the shared departments in a corporation or any firm or any organization allocating their resources to other departments that are we would call producing departments. So service departments, which would be the idea of the shared resource, would be allocating their costs to production departments. So when my wife worked full time, she was the editor of the Science Teacher magazine. Okay, and the association that she worked for actually had 4 different magazines. So what you had was one art department, and then you had 4 magazines. This art department supported these different magazines. Okay. Now, I don't know if the art department did this there. I'm just going to go ahead and assume that they would. But the art department, what I mean is that the art department would allocate their costs out to these magazines. I don't know for sure if they did that. I think they did. But in the context of our example, whether or not they did it, whether or not they actually did it or not, is somewhat irrelevant. It's just that we're going to assume that they did because they probably should have for these reasons. Okay, so at the art department, the art department would be a shared resource. Okay, and it's not easy to trace the cost of the art department easily to each magazine. Okay, so what we would do is we would allocate out the cost of the art department to these different magazines. And the reason that we would do that is for these different reasons. That's why we would want the art department to allocate its costs out to these magazines. The first one is to provide information for decision making. So allocated costs should measure the opportunity cost of using that resource, and there should be a charge for using that resource. Okay, they should charge it, and that encourages better decision making. The other one, these two I think are especially interesting to reduce the frivolous use of common resources and to encourage the evaluation of internally provided services. Let's look at those. Let's talk about those a little bit more detail. You know, if my wife did not get a charge from the art department, what I mean by that is, let's say she goes to the art department and says, I needed some piece of art for the magazine that I'm supporting. And then the art department gives her that piece of art, she's able to put it into that magazine. If she's not charged, then she could keep going back to the art department and saying, well, this isn't exactly what I want, it's not quite what I wanted, or I changed my mind and can you do it this way? Okay? But if she's charged, she's going to be using the resources of the art department more judiciously, okay? Because she's charged. And then also, if she's being charged, her magazine is being charged, then she has an incentive to evaluate how well the art department is doing. Because if she's not charged and the art department's not really that good, it's not too much skin off her back. But if you start to charge her budget, and that's how much money she has, and she's held accountable for that budget, then she's going to really start to care. Okay? So, kind of talked about these two. The other one is that this would be more in terms of a manufacturing company, but to calculate the full cost of products for GAAP. Okay? We say that down here. GAAP requires full costing for external reporting, and so companies are going to have to allocate out their indirect costs eventually down to cost of goods sold in order to be GAAP compliant. And the other reason would be, and this is something that probably a lot of you in the class, if you've worked with government or government contractors, have dealt with, is for cost plus contracts. You have to allocate these costs out for cost plus contracts. Of course, the way the cost plus contract works is that typically the vendor, the contractor, would receive all his or their costs reimbursed, and then they would receive a fee that can sometimes be a percentage of their total costs. It's used a lot by defense contractors, but the problem is it creates that disincentive to control costs. Okay, because basically, when I worked in a cost plus contract with the client was the Immigration Naturalization Service, the contract was sole source to the company that I worked for, and a lot of it was cost plus, and we were able to get reimbursed for a lot of our costs, and we had teams of people who just really did not seem that busy. And it was no skin off our back because we got paid more. We got our costs reimbursed, and we'd also get a higher fee because it's a percentage of your costs sometimes. And so we would get a higher fee. And so we just had incentive to have really large teams, and the people just sometimes weren't all that busy. Okay? This is a class discussion question that I will post it up on Canvas, and so I'll let you tackle that then. In terms of the process of the cost allocation, the first thing that we're going to do is to determine the cost objective, and that is the department, product, or service that receives the cost. Okay? So in the example that I talked about with the art department allocated, remember the art department allocated their magazine out to, their cost out to these different magazines. In this case, the cost object is that magazine. It's the product, department, or service that receives the cost. Okay? The second step in the process is we're going to form cost pools. And so a cost pool we can define as a grouping of individual costs whose total is allocated using one allocation base. Right? So if we think back to this art department example, all the costs in the art department could be put into one cost pool and then allocated out to these different magazines. Maybe in terms of labor hours, or maybe in terms of number of pieces of art requested, whatever their allocation base is. Okay? Some additional steps here additional points about cost pools. The costs in the cost pools should be similar. Okay? We would not want to put all the costs of the art department and all the costs of the janitorial department in one cost pool and allocate it out. Because then that makes it hard to figure out if you get a cost allocation that's a lot higher one month than another month. Who do you hold accountable? Who do you go talk to? The art department or the janitorial department? It's just too broad. You can't figure it out. So it makes holding people accountable harder. Okay? And it also leads to more accurate costing. The third step in the process of cost allocation is to select an allocation base. The thing about the allocation base, a few things, is that that allocation base has to be something that's common to all the cost objectives. So in the case of the art department to the magazine, all the magazines request a piece of art. You could say the allocation base could be the number of pieces of art. Okay? So the other thing is that the selection of the allocation base should be based on a cause and effect relationship. That's why I think number of pieces of art could be a good allocation base for the art department. Or take another example. We could say help desk tickets for IT help desk. The number of the more help desk tickets this IT help desk has to deal with, the higher their costs. Okay? And everybody that they're going to service gets a help desk ticket. Okay? Everybody that they help is going to get a help desk ticket, so that's going to be common to all the cost objectives. And the number of help desk tickets does have a cause and effect relationship to the cost of that IT help desk. The more help desk tickets that they have, the more costs that they have. And that's what I mean by the cause and effect relationship. Okay? Some allocation bases that we've talked about before, especially back in Chapter 2, we talked about labor hours, we talked about machine hours. There's a couple different ways we could do it. We could allocate out the costs. We could do a single rate where we put all the costs, both variable and fixed costs, in one cost pool and allocate it out using one rate. Or what we could try to do, and this would be a better way to do it, is to classify the costs in the cost pool by variable or fixed and then allocate them out differently based upon whether they're variable or fixed. So for example, what we could say is that all the variable costs in the IT department would be allocated out based upon how many help desk tickets. But then the fixed costs of the IT department could be allocated out to the cost objects. The departments that the IT department supports, the fixed cost could be allocated out to those departments based upon some fixed percentage. And we'll talk about why that's important here in a subsequent lecture video, okay? Look at these quick check problems. In the cost allocation process, the cost objective is C, the product, department, or service that receives the cost allocation. And then in the cost allocation process, an allocation base must have a cause and effect and must be a common characteristic that is common to all the cost objectives. So the right answer is C, both A and B. Okay. Look at page 6 over here. So all right, so we're going to start doing some computations with cost allocation. Okay. So this first one, Albright Company estimates estimated $270,000 of its accounting department cost to production and sales, since the accounting department supports the other two departments with regard to payroll and accounts payable. Okay? So what we're saying over here is we have accounting, and they're going to allocate their cost to sales into production. Okay? And that's because this accounting department is a shared resource. Okay? So they want to allocate their costs out for those reasons that we talked about. Okay? It says over here the costs will be allocated based upon the number of employees in the production and sales departments. So information regarding costs of employees is follows. So if we think back to how are we actually going to do cost allocation, the actual computations are very similar to what we did with calculating overhead and applying overhead, like what we did in job order costing and process costing. Okay, so the first thing that we did is we calculated the rate. Remember, the way we calculated the rate is we took our estimated total overhead divided by our estimated total allocation base. So in this case, our estimated total overhead, 270, and what is our allocation base? It's 60. It's not 64. It's 60. And why is that? Because it says based upon the number of employees in the production and sales departments. Okay? Also, if you have the denominator of 64 rather than 60, you're not going to allocate out the full 270 to production and sales. And furthermore, this 270 represents the cost of these 4 employees, and we want to allocate their costs out to the departments that these employees support. Okay, so we're going to divide by 60, and that's going to give us our $4,500 per employee. Okay, and then remember what we did back in job order costing is we said, all right, here's the rate, and then we take the rate times the amount of allocation base used, and that's how much overhead is applied. And we do the same thing. The rate times the amount of allocation base used is how much cost is allocated. So we come over here, that equals our 216, that equals our 54,000, and this is how much goes to production, and this is how much goes to sales. All right, thank you. We will continue on the next lecture video with more computations on cost allocation.